Precious metals shine brightly and stress in the Eurozone sovereign bond market eases. This is today's Markets Pulse. Well, gold and platinum extend their strong start to the year, today hitting their highest levels in a month. Reuters commodities correspondent Jan Harvey is with me now. Jan, let's start with gold. The price popping up there through the 200-day moving average, a key technical level. Does it have the legs to hold above there? And if so, where's it headed next?
Well, gold initially fell through that 200-day moving average back in December, which was a pretty awful month for the precious metal. It lost around 10% of its value and actually recorded its first quarterly loss since 2008. As you note, it has managed to pop back above that level a couple of times in the last few days. It's currently around 1635. And if we manage to close above that level today, then that could bode pretty well for the precious metal. We're up about 5% so far this year, so I mean it has shown some signs of life already. From here, if we do manage to get that good close today, then we could be rising up to target the 1682, 1700 level. That's where we're going to run into more resistance, according to the technical analysts I've spoken to this morning. Okay,
and what's driving this rally? Is this new year money? Is this new money being put to work at the start of the year, or is there something more fundamental behind it?
Well, it's a bit of both, to be honest. We had some really interesting data this morning on Chinese imports. The data came out of Hong Kong, and it showed that Hong Kong's exports to China in November were at record levels, around about 102 tonnes. For context, that's about a fifth higher than in the previous month. And what that tells us is that China is still thirsty for gold. China and India are the world's two biggest gold consumers. Between them, they account for nearly half of all gold fabrication demand. So strong demand out of China means strong demand for gold overall, and that bodes pretty well.
Okay, let's finish up with platinum. It's up 6% this week, and I think we'll have a chart in a second that shows it's on track for its second biggest weekly rise in 2 years. What's driving that, and where are we headed on the charts?
Well, platinum had actually a pretty poor 2011. It lost around a fifth of its value last year as a whole, which means that prices are now at fairly attractive levels for consumers. We also had some pretty decent fundamental news out this week. South African power utility Eskom said that we could be looking at some further power outages this year. There's also the threat of some safety-related stoppages, and since South Africa produces around about 3/4 of the world's platinum, that could tighten up the market quite a bit. That said, we are about to run into some resistance for platinum at around about the 1491 level, and the analysts that I've spoken to today have told me that we could have a bit of a pause there.
Jan, thank you very much. Well, the Eurozone sovereign debt market is also looking a lot brighter today. The better tone attributed to comments from Fitch on Tuesday that it did not expect to cut France's AAA credit rating this year, as well as domestic buying of Spanish paper ahead of a debt sale on Thursday. A solid German auction of 5-year bonds this morning also soothes nerves. The yield falls and demand is up from the previous sale. So peripheral yields and spreads narrowing sharply. Italy's 10-year yield dips back below 7%, a level widely seen as key to Rome's ability to finance itself over the longer term. But a warning from Fitch this morning that the European Central Bank must do more to prevent a cataclysmic collapse of the euro takes the shine off some of these moves. Italy back above 7% and stocks and the euro extending their losses. That was today's Markets Pulse. Join me at noon GMT every weekday for an update on all the big market trends and movers. And we have a special newsmaker interview with the Irish Prime Minister Enda Kenny at 10 GMT on Thursday, January the 12th. I'm Jamie McGeever. This is Reuters.